Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, January 7th. First of all, Happy New Year to everyone and welcome back from your long holiday weekend. This week with the markets reopening on Monday the 4th, they've been off to a bang. Let's go right to them right now. Let's go to gold, which we've been following very closely. If you take a look at this chart here, this is the same chart again that I have been following for the last few months for you. You'll see the breakout into a new acceleration phase here. A couple of weeks ago, just before the holidays, I did tell you that I thought gold was getting a little toppy in here and we could pull back to the upper trend line here of this channel, which gold did. We then fell back into the channel, but we've now found support at the 1090 level, a basis, this cyclical support line here, and gold is now starting to lift its head again. We're back up to about $1,130. There's a very good chance we could see gold move back to 1160, and at that point we'd have to see some other technical indicators to see if the next leg up to a new record high has begun, or we're going to chop around a little bit on the sideways action in here and dip back down possibly as low as 1090. It's too early to say. The cycles continue to point higher, short-term and long-term. Intermediate term, the cycles are a bit choppy. So I'm keeping an eye on gold here. There's nothing new to do there. Hold all of your positions and be patient, and let's see gold's next move, whether or not it can pierce back above this trend line channel here. If it can and close solidly above here in this area, we could easily begin the next leg up to new record highs. Conversely, let's look at the dollar. The dollar, last time I showed you this chart, I said the dollar would have trouble getting above 78.79, and lo and behold, that's pretty much where the dollar recently peaked, at the 78.87 level, and now the dollar is starting to trend back down. Too early to say if the rally in the dollar is finished, complete. We may see some choppy action in here, a pullback, then a little bit rally higher to a slightly new high around 79 in the dollar, and then a resumption of the long-term downtrend. Here is too early to say. However, I will say this, that the counter trend bounce in the dollar to the upside has been another weak one according to all of my technical indicators and my cycles. So I do not expect much on the upside in the dollar at all. At best, we'll get a sideways trading range for a month or two and then a resumption of the long-term decline in the dollar. Let's look at stocks. Basis of Dow Industrials. Here's the Dow Industrials chart that I've been monitoring for you. I've drawn in a couple of new lines to show, which I'll discuss in a minute. The Dow did not approach the 10,800 level I had forecast for year end. We got pretty close to it, 10,500 and change, and then on Monday, with the resumption of trading on January 4th, this past Monday, we've seen considerable strength in the Dow, a good 170 point rally on Monday, followed by a decline, followed by another push higher. You can see right here the Dow is pushing the upside of this resistance line. If we can get a solid close above there, we should get a run in the Dow to over 11,000. Cycles continue to point higher in the short term for the Dow into mid to late January, possibly extending into early February. So all my long recommendations in stocks remain a hold at this point, and we're looking for a breakout to the upside in the Dow. These two lines here I've drawn in for you. There's this uptrend line here and a longer uptrend line, which actually dates back to the March 2009 low, help to show you how much support there is in the market. For the Dow to fall apart right now, we need to see it fall below 10.2, and then you can get it moved down to 9,400 or so. So this is a very strong looking chart here, and I expect the Dow to perhaps consolidate a little bit in here, a little bit more, but soon break through to the upside and make a run to 11,000 and change. Once we get to that point, we'll have to reassess the situation. Other markets, oil has been very strong, which is another forecast I made a few weeks ago. We're seeing oil, I'll pull up that chart for you, run right up here. We're up to $82. There's a good chance the move up in oil will accelerate to new highs above 82. We'll need a few more days action there to see. All the commodities remain very, very firm on the anticipation that the Federal Reserve will continue to reinflate assets by monetizing more and more money, monetizing more and more debts. Till next week, this is Larry Edelson.